Good evening, everybody. Welcome to Let's Talk About It, the bi-weekly discussion where we talk about a topic that affects the Black community economically. And each time we start with our disclaimer. So um, the information provided in this discussion is strictly for educational purposes um, only. I strongly encourage people to consult licensed financial advisors, attorneys, and tax professionals before making any significant financial decisions. Even though I have decades of experience managing millions of dollars, I am not licensed or registered with any regulatory um, authority. So, um, with that, we are going to start with a brief overview video, and then we'll jump into the discussion.
It's not about being smart or making a lot of money. The real problem is something else. The real answer, it all comes down to timing.
Can't hear it.
Fastest. See, most people are stuck in this emotion of absolutely rational wealth. This cycle happens over and over. Smart money gets in early, everyone else piles in way too late. Why? Because emotions.
Sorry, we can't hear it.
Last year's winners take, and that leads to this.
You can't hear it?
No,
Oh, okay, hold on. I thought I had set the sound. Sorry about that.
All right, let's talk about how smart investors are setting up their next decade of wealth. So why do most people never actually build lasting wealth? It's a tough question, I know. It's not about being smart or making a lot of money. The real problem is something else entirely. The real answer? It all comes down to timing, behavior, and structure. That's the secret.
See, most people are stuck in this emotional cycle that absolutely wrecks their wealth.
This cycle happens over and over. Smart money gets in early, everyone else piles in way too late. Why? Because emotions, media hype, and chasing last year's winners take over. It's a trap. And that leads to this really destructive habit, speculation. It's just gambling on price. But the antidote, the real solution, is a total mindset shift. It's called positioning. Just look at the difference. One is reactive and emotional. The other is quiet and deliberate. Yeah, real success happens in silence. It's not flashy. It's just consistent, smart accumulation. So how do the truly wealthy actually do this? Well, let's look at their playbook. They think in decades. They buy when others are scared. They want cash flow, not hype. Exactly. They want to own real, tangible stuff that actually pays them cycle after cycle. Okay, so why is this so critical right now? Because a huge opportunity is opening up. Valuations have reset, the gamblers are gone, and private deals are popping up. The coast is clear. While most people are scared or distracted, the disciplined are making their moves. This is the moment. But look, trying to do this all by yourself, it's incredibly hard. That's exactly why private investment groups exist. They give you the education, discipline, and access. So you gotta ask yourself, are your decisions driven by discipline, or are you just distracted?
All right. So, with that, tonight's discussion is about 2026 is the year of positioning and how smart investors are quietly setting up for the next 10 years of wealth. So, why is it that most people never build real wealth? It's not because of a lack of intelligence, and it's not because they don't have the income, um, and it's not because of information, because the information is available on the internet. Um, but it's about timing, behavior, and structure. These are the three pillars that separate wealth builders from wealth chasers. So let's talk about the wealth cycle. Because every wealth cycle has the same shape. It starts off with a quiet accumulation phase. This is when the smart money enters when prices are low and sentiment is pessimistic. Um, this is where the groundwork is laid. And then the next phase is the public excitement phase. This is where the media coverage begins. The early adopters that get in um, first start to see gains, and then cautious investors start paying attention to emerging opportunities. Then there's the retail fear of missing out phase. This is where everyone wants in, right? Even your barber has tips. Valuations soar. And then the late entrants rush in at peak price, driven by fear of missing out. And then there's the collapse and reset. This is where markets correct, panic selling happens, and then the cycle begins again. But only the discipline recognize the pattern repeating. And so we saw this with the .com phase of the late 90s, early 2000s, in which the valuations for .com companies ran up in the late 90s, peaked in the first half of 2000, and then they collapsed through 2000, 2001, 2002, and then it reset. And in that, about 90% of .com companies got wiped out. But those that survived went on to establish a foothold in the .com economy. Amazon, Facebook, Google, that's where they were born out of. We can look at real estate, in which we had a real estate boom that also started in the late 90s, went through 2006, 2007, and then 2008. Um, Up to that time, everybody was buying houses and flipping houses. And when 2008 came and the collapse hit, um, people sold out of the stock market. People sold out of real estate, but the smart money through 2008, 2012 quietly accumulated value stocks and value real estate. And their patient investing paid off when the stock market and the housing market came back. And so now we are in the AI phase. We've passed the quiet accumulation phase. That would probably be 2015 through 2021. The public excitement phase started when OpenAI came out with ChatGPT, so that was in 2022. And we are in the retail FOMO phase. This is where the Magnificent Seven have seen their valuations run up. And the question is, are we still in the retail FOMO phase, or are we entering a collapse and reset? And so I'd like to hear from you guys. Where do you guys feel that we're at? in the AI wealth cycle? Just unmute yourself and voice your opinion. Go ahead, Leroy.
Okay, all right. I got a quick question on this. I see a component, and I could may have missed out from what you were saying, but I see another cycle between 3 and 4. And it go, and so I would say 4 is 5, and there's a 4, but 4 connects back to 1, where there's this quiet accumulation that's taking place, and then we go through the public excitement, the retail FOMO, and there would be those smart money reaping the results of which others were going in, and they were finally throwing money in later, where the smart money people are now reaping, and then followed by the collapse. This is just Leroy throwing out from my own concept of where I am now with what I'm doing in 2026.
So you're saying,
So,
yeah, I hear what he's saying. You're taking your profit, so you're not necessarily you got in early. It's almost max out. You see, it's about the FOMO happening, so you take some profits, but you don't dilute your position completely. You're just taking some money off the board. Is that what you're talking about, Leroy?
That's exactly right. So in other words, with this liquidity thing, these FOMO are coming in, and they are throwing money in, and so this is the opportunity of the flip, the changeover. When they throw their money in, this is an opportunity for the smart money people who came in at number one to take some of the profit, yes. And that's going to bring it down, the collapse down, and the cycle starts over. This is just Leroy throwing out.
so yes, I would agree with that. And so that's what the smart money does, right? It gets in early. When the FOMO hits and the prices rise, and it hits peak prices, um, they take some of their profits, and then when the collapse come and there's panic selling, then invest in in what are now considered value companies within the wealth cycle. Um, and we'll talk about that in one of the um, following um, pages. But but yeah, it's knowing when to take some profits, um, moving into cash, waiting for that collapse to hit, so that you can reinvest in the value companies, and ride this cycle again.
What makes, just because something happened in the past, why should we be linked to thinking that it's absolutely the same type of cycle? Now, for example, the dot-com era, yes, everybody did something. They were able to go out there. Everybody created something that was not physical, and you could do it. It was quick, and they rose up quickly and they came down quickly. But cell phones came out. Look at what happened with them. What happened when television came out? So, in other words, sometimes it looks like it's a phase, but maybe it's not. I don't know about AI. I can tell you this about AI. The big companies are going to continue to grow and do what they're doing, even when they don't know what they're doing. And let me tell you, they don't always know what they're doing. NVIDIA is out there acquiring companies in order to keep because they have to have a good 6 quarters worth of story. So they need 6 quarters worth of story to keep it going. But if you take a look at what's happening with AI, Nobody's slowing down on data centers, are they? Data centers are trying to go up everywhere, and they're projected to be tons of them. So that means AI is going to be being used constantly. And we haven't yet seen what happens when all of these people, especially in the financial services industry, are completely wiped out with jobs. No more jobs because look, you don't need a broker to be able to give you the information that you need. You can get the information yourself right now. It's all on the web through AI. So I'm just not so sure that the cycle works. And I also tell you, though I was raised like everyone else in managing money, talking about value investing, that's from Graham Dodd in value investing. It goes all the way back to what, the 1930s? And oh, it always works. Yeah, and sometimes it doesn't. Sometimes you got to ride on something that's not based on cash flow. It's based on the market situation. I'm not saying that there's a that there if it was so absolute, then people would ride on absolute. But you see, these things come in a time. They were remember here in Georgia, we had a guy named Elliot, and he had something called the Elliott wave theory. Man, that boy was up there in his garage up there in Alpharetta working the Elliott wave theory, made a ton of money, and then it collapsed. The theory didn't work anymore. So I'm just saying, it seems like it should be some kind of collapse, but I don't think so. I personally don't think AI is going to have a collapse. It'll be concentrated in the hands of a few, but it'll be concentrated. So anyway, that's my 2 cents.
So the technology won't have a collapse. It has to do with the investment cycle. So when we look at the dot-com bubble, right? The dot-com bubble also coincided with the telecom boom, which was a huge uh, capital infrastructure outlay. So the same way how businesses are going out building data centers, you had the telecommunications companies building out their telecommunications network. And what happened is they built too much capacity at the time. And so when the dot-com bubble burst, um, um, the adoption of the internet didn't slow down, um, but the investment cycle is what collapsed. People became over exuberant and threw in money at the top, and they ran valuations up. And so this actually leads to this slide of why most investors buy at the top. And here's the reason why I think that we have these wealth cycles and why I believe that we're going to continue to have them is because of human emotion. So this slide talks about why most investors buy at the top. And so the number one thing is emotional decision making. And so feed and I mean fear and greed override rational analysis. And so even though everyone is taught buy low, sell high, the reality is that most investors buy high, sell low, because of fear and a lack of discipline. And so in the media, the media definitely feeds into that, right? So every news show that you turn on now has something about AI in it. And so all that we're constantly bombarded with is the advancement of AI and how much the Magnificent Seven are investing um, in in AI and the valuations of these companies. And the same question, though, is when will they actually make a profit to justify the high valuations, right? Um, and you have investors that are performance chasing. Hey, Nvidia did 30 something percent last year, so I'm going to invest in them even though I know that that they seem to be overvalued. But I think that they're going to do the same this year. Um, Rather than doing sound technical analysis and identifying companies that can benefit from AI, but that are currently undervalued. Um, and a lot of investors don't have a long-term plan. They are just going from quarter to quarter, chasing quarterly returns. And so this leads to, again, investors buying at the top and overvaluating companies. So let's just look at what happened the last 3 years. So we've had inflation shock. We've had prices surge across housing, energy, and essentials, eroding purchasing power. We've had asset volatility, especially in 2025 with the Trump administration coming in and throwing tariffs. And we saw in April how the stock market took a huge hit. But if you had been scared at that time, and if you had sold at that time, you would have missed the run up in the second half. Versus if you would have identified um, undervalued assets during the summer and you would have invested in those assets, the second half would have definitely paid off. When we look at precious metals, gold and silver, I mean, silver has been on a tear. Um, Silver prices appreciated more than 150% last year. Um, Gold was 60 to 70%. Silver in in this month isn't even over yet. Year to date is up around 30 percent. And the month isn't even over yet, right? And so now, is there going to be a collapse in gold and silver? Is it too late to invest in them? Uh, this is where it takes some additional analysis beyond just chasing price to try to see um, where is the price of these commodities going, and are you investing for the short term or are you investing for the long term? And um, if you remember in 2025, I had recommended investing in gold as a hedge to inflation, and that everybody should have a part of their portfolio invested in specifically in gold. Um, but that is again looking at it from a long-term perspective. Crypto, boom and bust. Man, if we look at crypto and Bitcoin specifically from 2022 to 2025, Bitcoin outperformed gold and silver during that time. But Bitcoin peaked at 125,000 per coin in October, and it's retreated to the mid 80,000s. Now, does that mean that there should be fear in investing in Bitcoin? Not if you're doing it for the long term. Um, I you know, I still hold to the recommendation of buying Bitcoin. I think this is an opportunity to buy and get in at a lower price, and I still believe that over the next 5 to 10 years, Bitcoin is going to go toward that $1 million price. And so um, you know, and crypto is has is reaching its maturity level because it's becoming infrastructure and it's becoming the rails upon which finance is being built and being built at a very quick pace. The conversion from the old financial systems to new blockchain-based crypto systems is happening at a blazing speed. Um, and so I think 2026 is a year to position yourself. Economic anxiety, and Tim, you talked about this with layoffs and AI coming for everybody's job, and the instability of what's going to happen just for the rest of this year when it comes to employment and layoffs and inflation. Um, and so this has created quiet opportunities. So rather than focusing on fear and uncertainty, this gives you the opportunity to position yourself in private markets, undervalued assets, and strategic accumulation. So the one distinction that changes everything is going from speculation to positioning. So when you're speculating, you're chasing price. You've got short-term thinking. It's all trend driven, and your decisions are based on emotion. When you're positioning, you're accumulating value, right? You're buying undervalued assets, and you're buying those assets that have the best chance for appreciating over the next 10-year period, because you've got long-term thinking, and you're being strategic and disciplined when you're following a structured investment pattern, and it's quiet and boring, right? Success happens in silence. There's no social media posts, no bragging, just consistent accumulation. So, how do wealthy families think? Um, they have a decade mindset. They think in 10, 20, 30-year horizons. Um, and they are doing most of their accumulation when there is blood in the streets, right? So they picked up a lot of undervalued stocks and real estates between 2008 and 2012. They picked up more undervalued stocks when COVID hit, and when there is this pullback that happened in April was a great opportunity to accumulate more. And so crisis accumulation is a key theme. Cash flow priority. So they prioritize cash flow over speculative appreciation. And so this is the opportunity to pick up undervalued cash flowing assets. And so this is where you can have some high appreciating assets that are in the retail FOMO phase, where you can look to sell off some of those assets, take some profits, reinvest those profits into undervalued cash flowing assets so that you can have some cash available to reinvest when the market corrects and you're able to pick up some more undervalued appreciating assets. And private deals. So the private markets have been going buck wild the last couple of years. And so being able to get into angel and VC and private equity deals has really paid off these last couple of years. The problem is the average person doesn't have access to those private market deals. And so this is where CPIN looks to create those private type market deals and allows people to put their money together to invest through special purpose vehicles. So the CPIN has established what we call the 4 pillars of modern wealth. So one is private markets, access to deals unavailable to the public. The second is real tangible cash flowing assets. So whether that's income producing properties, whether it's infrastructure assets like crypto and Bitcoin and the ability to stake those assets and to create yield while those assets continue to appreciate in the future, as well as precious metals, which will continue to appreciate. I've talked about Bitcoin and digital assets. And then the 4th pillar is education and community, right? Continuous learning, strategic networks. This is what CPIN provides, right? Surrounding yourself with disciplined thinkers to where we can bounce ideas off of each other and we can talk about each other's experience. So we believe that 2026 is the positioning window. We believe that some valuations are going to reset. We see this starting to happen in some of the big tech companies. So for example, I think it was Microsoft that lost 10% today in just one day, right? And so it's taking opportunities like today to be able to get in at a lower price to some of these longer term technology plays. and we believe that when the big shakeout happens this year, that you'll see speculators um, starting to exit the market. We're going to um, create more private deals that will be accessible to CPIN members. We believe that now is a great time for accumulating long-term Bitcoin. And uh, we believe that distraction creates an edge. That while most people remain fearful or distracted, creating uh, uh, asymmetric opportunities for the prepared and the disciplined, right? Low risk, high reward opportunities. And um, as I've repeated, CPIN is really for those long-term um, investors, not the speculators, but for disciplined long-term investors. Um, and so rather than doing it alone and without a long-term framework, um, this we created CPIN, right, a private investment community built around long-term wealth creation through cooperative uh, group economics, pooling our money, pooling our wisdom um, together, um, having a disciplined education platform through our educational courses. Um, we create better informed investors because better informed investors make better informed decisions. And then ultimately, it's giving you guys access to structured private deals, whether it's investing in uh, private early stage companies or whether it's um, structured private deals into real estate or strategic investment opportunities um, like SPVs investing in Bitcoin and in crypto. Um, so that is tonight's presentation. And so we've got about 15 minutes left. And I want to just open the floor up to discussions on how each of you sees yourself um, positioning yourself for 2026 when it comes to investing. And just unmic yourself and feel free to speak. Uh, okay, I'm just going to have to pick on somebody. Leroy?
Thank you. I'll tell you, this presentation tonight has really opened my mind from the point of view of what is long term and what is short term. And then I'm thinking about that number 4 that I was trying to insert in there. And I think I was more so thinking of the short term. But I do see what you were saying about the long term in terms of the cycle. My focus, I'm focusing a lot on crypto, and I don't want to be too narrowly focused. And I'm saying that because after listening to the whole presentation, and I do recall you mentioning gold and silver last time, and of course that was on my mind, but I didn't take advantage of it. And so there was this opportunity, with this. And then there's this other part of of acquiring the individual knowledge and applying it to work with the plan that you have, which I do have. But now I also see I also see the community um, um, coming together and through private investment community and working together and making things work. So my mind after coming on the call tonight has been somewhat expanded from the Leroy plan, which is more so of short term of looking at 2026, which is the positioning that you have just mentioned. And I have created my own system for doing this. I spent the latter part of 2025 working on a plan of technical analysis and things of that sort. And I think I have it in place now so that the positioning part, which is taking place within the beginning part of this year, and more specifically, January is a very key part of this positioning that I have with my plan. So I do have a view of it, but at the same time, my mind has been opened up a bit more to look more at the private investment community, realizing that one person in one mind just doesn't know everything, and we can benefit from sharing.
Amen. Amen. Great insight. Um, Timothy, what about you? What's your positioning for 2026?
Well, I'm not the traditional investor who takes his money and figure out what to buy this stock and that. I'm an M&A guy. I mean, that's really my area of expertise. And so
Hmm.
if I can't buy the company, I'm looking for targets that I'm looking very heavily at targets that can benefit from the environment and so forth. So I'm kind of like doing the investment, but it's not because of what the trends are or something like. And it is value investing as well. But I'm really into M&A positions and being able to challenge corporations and see if I can get them to move in certain directions as a shareholder. You know, you can have one share of stock and be powerful within that corporation, be able to tell them what to do. And so I'm like my personal goal is to be a what they call a constructive activist in shareholder activism. So that means you buy it and you see what you can do and
Hmm.
happen to grow. So I'm really geared in that area. As far as investing and stuff like this, man, there's so much out there. Now, I've seen people make money on Bitcoin, and I purposely chose not to go into the Bitcoin area to even learn it. It was just too much I could put in my head, and that's one I didn't want to learn. But people are doing fine, and I think it's great. People have made money, and I it's way beyond me. So I look forward to seeing how people do that, and so forth. I will tell you this: we're being impacted by a lot of things other than tariffs and that are going on out here, and we got to take a look at what this guy is doing. This whole situation when he went into Venezuela and he grabbed the oil. This is not a move just for Venezuela. This is a move where they're trying to go back to unhinge everything that OPEC did. When all the OPEC companies seized the oil, and they're trying to undo that and get the oil back in the hands of oil companies. Why? Because not because the oil companies said they need to do this, because this is the old school thinking that we have sitting up there in the White House and his boys. Let's go back and get the stuff what we can. We have the power, and therefore we should be able to do this. This is going to be really a very touchy area. Look at oil and where it's going to go and how it's going to be because those oil companies, they're not really sure which way to go, but they're going to be interesting as to what they do. I don't know if it's going to be up or down. Oil is always going to be here. And it's something that you have to look at. It's a great commodity look at, and those oil companies are very smart in terms of making money. Now, I mean, very smart making money. I don't like what some of them do, like Chevron and what it's doing to support the whole genocide in Gaza and the whole oppression of Palestinians by taking their oil and then giving the money to the Israeli government and doing all that. So I'm not interested in that, and I'm actually actively involved in fighting those types of things. But anyway, from an investment standpoint, for me, uh, I am looking at corporations and how I can get my hands inside the corporation to maximize my dollar. Oh, and by the way, I don't look at just income. You can't just look at income. Companies made money. There's one company I can tell you that didn't make money for years, but the stock kept going up. It's called Amazon. Amazon didn't turn any profits for a long time, but that stock didn't go down. It kept going up and up and up and up and up. So you got to look and see where the opportunity, where it's going to go, and where the trend's going to go. OpenAI is not a public company, but they don't expect to make a profit until 2030. And yet they're going to be dropping about another $40 billion into that company. Who's putting $40 billion into something that they don't think is going to make some money and be profitable until after 2030? So you got to know that there's an opportunity, that they're looking at this for a reason why they're dropping this money in. And so, and it's really going to continue to grow. And they're all looking for how to do it. But that's all the big companies. The small companies, all the people who take a little AI tool and turn it into a little mom and pop. I have a good friend. He says, "Oh, look at my AI company." I looked at it and said, "Oh, you're taking this AI product and that one and that one and that one, put them together, and now you think you have a suite of AI products and you got a whole new AI company." No, you don't. You just got some stuff that you put this together with that together, and that's fine. You got it. It'll work. It'll be fine. People will make a little money, but I wouldn't invest in those. I would only invest in AI game only with the big boys. Stay away from the little ones. They will be here today and gone tomorrow. Stay only with the big guys uh, because they're going to weather the storm. They're going to gobble up all the small ones that have value. I mean, that's really what they do. They look for all the things where they can have value to increase what they're going to do. They're going to gobble them up. But anyway, last thing I'll say is that with my own personal thing is I'm starting to look at, and I just learned because I hate taxes. I went to law school. I didn't take any tax class. I hate tax classes. So, but donor assisted funds, a lot of our people have nonprofits, 501c3s, and they could turn those 501c3 into donor assisted funds, what they call sponsoring organizations. Make some money off of that by having a division of it. Donor assisted funds under Trump's OBBBA, in the big beautiful bill he called, but OBBA, under that particular act, he makes it so that on your income you can give up a huge chunk of your adjusted income. You can give 60%. You can drop 60% of your money. If you win the lottery tonight, you can take, before they take the taxes out, that cash option, you can take 60% of that cash option and stick it into a donor assisted fund. Then you got to pay the taxes on the remaining of the money. But the money that you have sitting in that donor assisted fund, that's a nonprofit. You get to direct what nonprofit it's going to go to. So that could be a church, that could be a school, that could be a program, that allows you to expand your donation capability, which allows us to be able to enhance what our community does and so forth with that money. 60% of your income. Wow, that's massive. But we don't really know that because we looking at every nickel and dime. But that's something I'm just learning about, and I'm not only learning about it from the standpoint of being able to say where can I put my money, 60%, but can I control a donor assisted fund? Can I control a 501c3? Yes. Is that a way for people to have 501c3s to get it rather than just get a 501c3 and go begging around? Oh, I'm gonna do good work for the people in the community. No. There's another way to get the money. So I would suggest looking at some alternative things like that for me. So and working. Last thing for people out there, if you ever want to know any kind of business stuff like this here, hook me up. Tim.Holly at gmail.com. I love to talk about deals. every kind of business deal and look at it. I'll be glad to assist. And I have a team of people with me, lawyers and accountants and all of that and so forth. And if I saw something I could throw my team at, I'll throw my team on it, and it will come at you and it won't cost a dime. So and they're all sharp. They're all sharp. So anyway,
Praise God. Thank you for that, Tim, for extending that. Praise God.
Yeah, definitely. Thanks, Tim. And Mark, how are you looking at using 2026 when it comes to positioning?
I'm real simple, right? All my chips are in the middle of the table with one bet. All my eggs in one basket, and I'm watching that basket because I know I'm playing in a market that if we execute and reach our minimal goals, it's $1 billion market cap. So I'm taking the founder's approach to building wealth and building out the no backboard basketball league. And every penny, every dime I have goes into that. So my personal position is it's happening or I'm gonna die trying. There's no other option. So that's how committed I am and how confident I am that we will get to the end game. So I'm taking an Elon Musk approach. My wealth is going to come from what I build, and I'm willing to pay the price up front to earn the right to reap the rewards of building something that impacts the lives of hundreds of thousands of people and can entertain millions of people globally.
Amen. Amen. I too am on that path of reinvesting every dollar into my businesses, and so that's the founder's mindset. So I definitely understand what your focus is.
And with that though, with that though, I do my best to pay attention to what's happening out in the marketplace. I would echo Tim's thoughts on the whole AI thing. He's absolutely right. I mean, a lot of these companies are just going to be building on top of other companies. And in the AI space, in addition to the big guys, I would also say, the picks and shovels, right? So I'd be interested to see what opportunities are going to come with nuclear. Because on the energy side, there's the talk for, they've already allowed nuclear. The other thing I'm interested in, maybe Tim at some point might be able to help connect the dots, but some of these bigger AI companies and are building out their own power systems off the grid, right? So they received approval for that. So in the AI thing, I think it's picks and shovels. And I think fundamentally what I've learned from like a retail investing side, if you're going to invest, it's better to invest in the picks and shovels. What is the infrastructure underneath everything that gets everybody excited, right? So I'll land the plane on that.
I love that.
Yeah.
I love that picks and shovel thing. That is really, you dead on it. I love that picks and shovel because you can all this other stuff like AI that's running on top of it, and we already heard Michael said it when he talked about the move that was happening in the telecom area. You had to build that stuff out, and it's the build out guys that's gonna make some money.
Yes, agreed.
Tim, is that tim.holly@gmail.com or Timothy?
Timothy, like in the Bible.
Timothy. Okay. All right. Thank you.
Yeah, and actually, maybe our next discussion will be about the infrastructure AI play, and identifying some value companies that are again low risk, high reward, not overvaluated yet, like some of these other companies. So I think that'll be a good topic for a future discussion here. Um, and Joseph, I know that you made it right at the end, but we're just going around talking about um, how we are positioning ourselves in 2026. So you got any comments on that?
Yes, sir, I do. Thank you for inviting me in on on this conversation. Um, my main focus right now, as far as investing is concerned, is I am investing in the rails of the new worldwide financial system because that is the place where I can see I'll be able to make most of the gains that I'm going to need to make to implement what I'd like to implement. I know that, um, well, I don't know this, but I'm sure that everybody knows that um, our Medicare system is um, and our healthcare system in the United States has gotten to the point where it's unaffordable, and it's always um, at the risk of whatever government whims um, um, are prevalent at the time. The government, when the government shuts down, um, or when the government decides that it wants to raise the prices, like every single year, me being retired and on Medicare, my Medicare premiums go up every single year. Not only that, but the Social Security system is um so what I'm trying to see is due to be insolvent. The trust fund will be depleted by 2032 if uh the House and the Senate doesn't act. My idea is that I want to use whatever gains that I make to set up blockchain systems for both of those. Well, for healthcare for everyone, but also a retirement system. Both of these would be voluntary participation, but set up a blockchain system for each one of those things so that every worker, if they decide to, they can contribute and buy tokens in the system that will actually over time generate more money than it pays out, so that everyone will be guaranteed a retirement system on blockchain that is controlled by smart contracts. Um, so if they put into the system, and I'm choosing a year like 20 years as far as the retirement system is concerned. And as far as the healthcare system, I've got some ideas about how that's going to work, but I'm going to need to get together a team of people who have expertise in different areas than what I have, who would know how to implement this kind of thing so that there will be healthcare for everybody, um, blockchain based, smart contract controlled, and a retirement system for everybody. And it's for the people who voluntarily um, uh, take part in these systems so that the government will no longer be able to hold our healthcare and our retirement system in the balance when they're not able to get along with it, when the government's not able to get along with itself.
Wow, that is two great projects. And I can definitely see those projects coming to fruition in a much shorter time than 20 years, especially with AI and the benefits that AGI is going to bring to society. And it's all a matter about the choices that we make on how we're going to use it. Um, so I want to thank everyone for their participation. This has been a lively discussion as usual. And so I look forward to seeing you guys in 2 weeks. And don't forget to visit the CPIN members only website. I'm implementing some new features, also implementing a tiered membership that will go into effect here very soon. We're going to keep the free tier, but we're implementing a a paid core tier that will unlock some personalized features such as a personal planner, personal investment strategies, a personalized AI assistant, and the paid tier will also come with some CPIN learning credits that can be used toward intermediate and advanced courses. And then there's also going to be the investor tier. So anyone who invests into any of the investment opportunities will automatically get all of the features I just talked about, plus some additional ones that are investor related. So please take the time to visit the CPIN membership or the CPIN platform and check out the new tiered membership. With that, everybody have a great night. Stay blessed and stay safe. Bye-bye.
Good night, everybody.
Good
Good
night.
night.
Great call.